Hello everyone, welcome back to the channel. This is Imtiaz and welcome to the 5% Club. Okay, so today again we are covering basic to advanced series. So this is the third episode, that is third lesson what you're going to learn. So what are the types of trading is what I'm going to teach you in this. Okay, so what are the type of trading, what are the type of trading people usually do. Okay, so let's get into it. If you see, there are three different types of trading. One is intraday, swing positional, and third one is investing. Okay, so intraday is nothing but you have to buy it like imagine today is 19th. You have to buy it between 9:20 to 3 o'clock and sell off, that is square off that position before 3:20. Okay, so it is called as intraday. Next comes swing. Swing is nothing but you buy a stock and you hold it for a matter of days or matter of weeks or matter of months. That is totally up to you. Swing is like that, but in swing the problem is you cannot sell it and hold, you can only buy it and hold. Then comes investing. Investing is done on a bigger scale. So investing, you buy it and you hold it for years and years and years. At least 10 to 15 years is what we are expecting in swing for a good returns. Okay, so let's first see what intraday is about. The pros and cons of intraday. Okay, if you see the pros of intraday, the profit or loss is in quick time. So basically you will see the profit or loss, whatever the result is, on a day itself. That is, imagine if you're entering a trade at 10 o'clock in the morning, and by 3 o'clock 3:20 you'll be able to see if it's a profit or a loss, or you can book your profit or loss depending on the market conditions. Okay, and pros about the intraday, next is it requires a very less capital, because brokers like Zerodha, Fires, Grow, all these people, they give good leverage. Okay, so you can trade with that. And another pro is you don't have to lock in your big amount, that is whatever money you have in your account, you don't have to invest so much and it won't be locked there. Okay, and you get to experience different conditions of market. Like imagine if the market is going sideways or up or down, so you emotionally you'll be able to see a lot of things happening there. So these are the pros of intraday, and let's see the cons of intraday. So you have a very high chance of losing money. Okay, because you tend to take more trades. Okay, you tend to take a lot of trades. Because of the leverage, you'll be doing more trades and you'll be losing a lot of money. See, the more trade doesn't mean more money. More trade always means more risk. Okay, you always see the market in that direction. Always, the more you trade, the more you're ready to risk. Okay, but you should always have a risk, like you should always have a risk appetite. Like risk per day should be, it should be on a constant base. This is my risk per day, I'm not going to risk more than this. And because the brokers give you so much of leverage, people tend to overtrade. And what happens is, next, because of overtrading, because of the losses, the second point is psychological imbalance happen because of losses. So imagine if you lost 1,000 rupees on the first trade. Okay, next what you will do is you tend to recover that money. You don't go for the next trade, you just want to recover your 1,000 back. You get angry on market, you start revenge trading. And what happens there is, you take more trades, the probability of yours is actually it becomes very narrow. So the more you trade, the more you risk. Okay, next is, it requires a lot of high skill. Okay, intraday really requires a lot of high skill. It requires a lot of risk management, money management, psychological management. All these things is very very important when it comes to intraday. And in intraday, there's another thing is, you cannot always define 1 is to 2. I will exit only with 1 is to 2, 1 is to 3. Sometimes you have to, depending on the market condition and sentiment, you have to book your target in 1 is to 1 sometime, or 1 is to 1.5, 1 is to 2, or sometimes 1 is to 5. Even these happens. So intraday is traded two ways. One is people do scalping, which is done in a very smaller time frame, that is like quick in and quick out. People enter in a 1 minute, 3 minute, 5 minute chart. They enter and they exit, like within an hour they exit off. Okay, that is scalping. They wait only for one swing or two swing. Day trading is another thing in intraday, that is, you buy it at 9 o'clock, 10 o'clock, 11 o'clock, 12 o'clock, 1, 2 o'clock, and you square off by 3:20. Okay, so this is about intraday. Let's get into swing now. Okay, what is swing or positional trade? Okay, the pros of swing is, you can hold one or more than one position for more than a day or a month or two. You can hold your position, that is, you can buy few stocks. Like you can buy your stock according to your risk appetite, according to your money management and risk management. You can buy and you can hold it for 1 to 3 months. Yesterday I showed you a video on how we made 1 is to 12 risk to reward ratio, and US oil, right? Crude oil. So that is a swing trade. I bought it, I held it for 2 days, I sold it. That is more relaxing trade. Okay, that is more relaxing trade. It is relaxing than intraday. Okay, uh, and you take very less number of trades. You don't get trades everywhere. I'll tell you. If you learn basic to advanced fully, you will see money everywhere in the chart. Okay, you will see money everywhere in the chart. I'll tell you how it is. So you will see money everywhere in the chart. Okay, I'll show you how it is. Just a minute. Yeah, okay, this is 15 minutes time frame. You will see a resistant here, so you will sell. Then you will see a small candle forming here, you will buy. So you will get a lot of trades. Okay, if you see, this is a resistant, this is a support, this is a trend line. So basically we start seeing trades everywhere. Okay, you see a hammer, you see an upside down hammer, you see a small hammer here, doji here, shooting star. You see all this thing and you start trading. Okay, then what happens is intraday becomes very risky. Okay, but in swing it's not like that. Swing, you wait for your defined place. Once the market comes there, you enter or you don't enter at all. That is how swing is done. Okay, in this you don't have to enter early or exit early. You can just enter exactly on your price, but you have to know the market structure for it. Like, will the market even come there? If the market comes there, I will enter. If the market is going opposite to my direction, I'll exit. So this is about swing trading. And you can follow a big trend. You can follow, like, if the market is going up, you can follow the trend. Okay, so how it is, if you start analyzing it in a daily time frame, you'll have a very clear picture, like, where market is heading. Okay, in daily time frame, if you go to daily time frame and see, you can see where the market is heading. Market's in a clear up direction. Okay? Market's in a very clear up direction, so we should only be seeing on a buy. Okay, we should only be seeing on a buy. But because I know market, how it works, I'm expecting a red candle here, because see, market can't go up like that. It has to go on waves. It has to go on swings. It has to go on waves. So this is how market works. Okay, you see, up, small down, up, a big down, up. It I am waiting for another swing down. Okay, that is why there you can see a small counter trend trade is happening here. You see, yeah, this is what is done. And let's get into the next point. Your targets can be defined. Okay, you can see for a good support or resistance zone, and you can define your target. And support and resistance are always good to take profit. You can define it. What are the cons of swing trading? That is all your money. Okay, imagine you have a lakh rupees, and you are investing 25,000 per stock. You can buy 4 stocks, and all your 25, 25, 25, 25, all your 25,000s are stuck in that. Okay, you cannot take them out. You cannot you can only square off your positions and take them out. Okay, and you cannot carry forward your sell. You can only carry forward your buys. Until and unless it is FNO, that is futures and option, you cannot carry forward your sell positions. Okay, if the market gaps down or gaps up, you will face losses. You will face losses more than what you're expecting. This happens. These are the cons of swing trading. But swing trading is very good for beginners, because they don't have to focus a lot on screen. They have to just focus 2 times a day, that is morning while opening, market is opening, because to set up a stop loss you have to see once. And before like 3 o'clock, before 3 o'clock, you just have to log in once, and you have to just see, technically you have to see, or fundamentally you have to see, and then you have to invest and set your stop loss and leave it. Okay, so swing trading is really good for beginners, and I do swing trading a lot because swing trading is really relaxing. I do intraday to swing in commodities, that is US oil. That is how I do my commodities. I'll be explaining that in the future videos. So let's get into investing now. So the pros of investing. Okay, can you, the same way, it's also like swing trading, but you hold this for at least 10 to 15 years. Okay, if you hold it for 10 to 15 years, you can get a very good profit. So how do we analyze it? We go to weekly or monthly time frame. So this is monthly time frame, and we analyze it here. Like, I'll buy here, I'll sell here, I'll buy here. You can clearly see where the support is, where the resistance is, and you can clearly trade this. Okay, so imagine you're buying it here at $17 and you're holding it till $116. How long did this take? Let's see. So if you see this, we invested here, exited here. It took 821 days. Okay, it took 821 days. Basically it took 2.5, 2.25 year it took. Okay, so you have to wait for such a long time. okay, for it to reach better prices. Okay, that is with investing. And next thing is, as the economy grows, your returns also are pretty good. Okay, so imagine if Reliance is doing good and economy is growing and government is also supporting Reliance. So if you have invested in Reliance stock, it is definitely going to go to a good level. Okay, because you're a consumer of it, and the company is also doing good. And there are a few stocks like Vedanta, and there are a few stocks which will give good dividend. Okay, people live through dividend. Okay, Indian Oil gives good dividend. There are a few stocks which gives dividend, which will be covering on the uh, benefits of investing. I'll be covering all that, how dividends work, share splits works. I'll be covering all that in the other video. Okay, so what are the cons of the investing? Okay, you have a very high chance. Okay, there is a higher chance of losing your whole capital. That is, imagine if you've invested 25,000 in a stock, you want to leave it for 15 years. Okay, you want to leave it for 15 years. If the company doesn't do good in the future, or if any bad news has come, or if the company is going bankrupt, your whole money is gone there. You cannot do anything on that. Your whole money is gone there. So I'll give you an example. Take an example of Kingfisher. What happened with Kingfisher, we all know. Vijay Mallya was kingpin then. He was running Kingfisher, but because of his loans and debts and I don't know whatever the big issues were, but his company went totally bankrupt. So whoever invested in Kingfisher, then they are basically gone broke now. So, and cons is, everybody has no idea how to read the balance sheet or how to see the company's profit, company's losses, company's fundamentals. So you have to be good at reading fundamentals of the company. That is, you have to know to read the balance sheet of the company. You have to know their business model. You have to know how their business work. All this is a part of investing. So this is about the trading, guys. This is about the types of trading. So I hope it is clear. If there is any doubt, you please ping me. I'll definitely reply to you guys on that. And for the beginners, please stick to the swing trading, because that is more of a easy trading. It does not require a whole lot of skill. It requires less time, and market fluctuations won't irritate you a lot. So this is about type of trading, guys. I hope you guys got something to learn from this video. So I'll be posting my next learning video on Thursday. Thank you so much for watching. Please support. Take care. Bye.